What if you could spot the next Wynwood before anyone else? What if you knew how to turn a row of warehouses into a $50 million neighborhood? That's exactly what my guest today has done over and over and over again. This is Jaime Sturgis. He is the CEO of Native Realty, and he's not just closing deals. He's literally redrawing the map of South Florida, from Wynwood to Flagler to Fat Village to Studio City. Jaime has led over 2 million of square feet of transactions. He's brought in brands like Walgreens, Coca-Cola, Montes Swimwear, Go Grocers, the Carlisle Group. He helped take Motif to 100% leased. He sold the Hive and the Flagler Uptown for a record-breaking $13.25 million. He's built a brokerage that's now working on $50 million in off-market deals in some of the most promising emerging neighborhoods in Florida. And he did it all while staying rooted in the neighborhoods he grew up in. All right, buddy. Okay, welcome, Jaime Sturgis. Thanks for being on the show, and welcome to Real Estate Profit Boost, where we interview the titans of real estate, and you're certainly one changing the landscape.
No, I appreciate the opportunity. I love the podcast, and I love what you're doing. So thank you.
Awesome. Thanks, Jaime. Thanks for being on. Okay, cool. So, Jaime, you were part of the original crew at Metro One, helping pioneer Wynwood, but you left to launch Native and bet on Fort Lauderdale. Can you tell us a little bit on why it happened, and take us through a little bit of the story?
Yeah, for sure. So it comes back to how I got into real estate in the first place, right? So I was up at Florida State. I took an internship down in Miami in Wynwood about 15 years ago. Very different place. The neighborhood was in its infancy. Tony Goldman was kind of still there and kind of starting to articulate his vision for it. And it hadn't matured yet. So I was watching the birth of the neighborhood and the conversion really from what was a heavily industrial district into something that was arts and culture focused. And when I graduated college and I moved back home, I realized that there was a gap in the market, right? So all of my friends that grew up in Fort Lauderdale, they moved elsewhere. So the Chicago, the New York, the LA, wherever it was. And I asked them why. I said, why are you leaving? And they all felt that Fort Lauderdale was boring, right? It was kind of like our parents' town. Nothing changed. It was stagnant, and they were right? I mean, that there wasn't a lot of development. There wasn't a lot of change.
Right.
It was just very set in its ways. So
Elbow Room was still there. Yep.
Yeah, exactly.
It's still here, right? Go ahead.
Yeah. So anyways, I watched this gentrification, sometimes a four-letter word, but that's kind of what happened in that neighborhood, where you took something that was sort of a blank canvas. It was centrally located, close to the urban core, and it had the building blocks for something that was going to be unique and it was going to be different. And a lot of it stemmed from adaptive repurpose, right? So it was going in, taking some of these old warehouses and adaptively repurposing them to fit the Panther Coffees of the world, or all these different bars and restaurants that had a lot of arts and culture. And it was unique. It was something that was different. We didn't have it down here at the time. And I learned a lot of amazing lessons. I also started my career coming out of the Great Recession. So it was literally the hardest time,
2009, 10, right?
Exactly. Yep. Yeah.
Right.
So, you couldn't give things away. So you had to get very creative and entrepreneurial and figure out, how to create value propositions and think outside the box. And those were all amazing lessons. And so Wynwood was kind of the start, but then it went into a bunch of other neighborhoods down in Miami. So Little River, Sunset Harbor, Upper East Side, all these different neighborhoods. And as I saw all of those different neighborhoods, everyone was unique and had its own story to it. But there was common elements amongst all of them and lessons learned. And I pointed north because, again, that's where I'm born and raised. It's where I'm now raising my family. And I wanted to bring it back home. I wanted to bring it north. There was some pride in that for me of being able to change the city, design it into what I thought it should be. And what myself as a consumer and my friends that had moved away were yearning for, but wasn't present in the market at that time.
Wow, it's super cool. So, if you look at your early career, right, at down in Wynwood and the vision that you guys had, like obviously there was a recession, right? But you almost created your own, this is an off the cuff question. You created your own demand. And how did you create demand, not only for the tenants, because if the tenants weren't there, right, there was no people. So was there any kind of a secret strategy? Because on Real Estate Profit Boost, right, anybody can buy a cap rate, right? Anybody can do this. You guys are, what you've done, Jaime, is like revolutionary. You have your own strategy. So share a little bit of how you do that, I guess.
Yeah. So look, we're playing in well, I should say, I was going to say in a non-institutionalized commodity. And, so I put a little asterisk or a caveat there because in recent years, the institutions have seen the profitability of some of these neighborhoods and now want a piece of it. But at the time, when we were doing
Got
it, it was not an institutionalized project or product, and it was not something that you were going to go find at the CBREs of the world or the Cush or JLL, whatever. It was outside of their wheelhouse. It still is to this day, right? I get calls. I'm good friends with all those guys, and they send me all their clients because they don't understand it, they don't know it, and they know that I'll always do a better job. So they're going to send their clients over so I can handle it. But again, it's a little bit non-institutional, or it certainly was, right? There's, again, a little bit of variation now.
Right. Bringing
So
in
it was its own
Coca-Cola.
asset class
Right.
in many ways, right?
Mm-hmm.
So yeah, we were creating a market, but again, we were the end consumers. So and still to this day, right? I mean, one of our competitive advantages as a firm, we have 35 people here that they're living, eating, breathing, sleeping real estate, right? And we know what the market is missing and what we want because we are the end consumer, right? We are in these neighborhoods day in, day out. We are supporting the tenants that we go put in. We have an ear to the ground. We're talking to them. Hey, what do you think is missing here? What do you think would be a good co-tenancy for you? What would you like to see next to you? All of that. So again, we're uniquely positioned in that we are the end consumer. So we really have this ear to the ground and finger on the pulse of what's
Right.
missing or what should be coming next. And we're entrepreneurial, so we have the flexibility to be able to, kind of draw outside the lines a little bit and get a little creative and operate in an asset class that didn't really exist at the time.
Right. No, I get it. I get it. Does it start with you securing a tenant, or does it start with gentrification of a neighborhood? Because you've taken neighborhoods that did not have trends of gentrification, but you saw an opportunity, you saw warehouses, and then does this strategy start with a tenant?
So it's a holistic approach, right? So I always say we're storytellers first and foremost. So when we go into
Got
these
it.
new neighborhoods, Flagler Village is one that we're very well known for, but it's certainly not the only one. But so when I went into Flagler Village, it was door by door, day by day, right? I knew every single owner. I knew their motivations. I knew when they bought, when they want to sell, the tenants that were going in, what the lease rates were, what the sales, encyclopedia-like knowledge, right? I know every single property owner in that neighborhood, and I could pull it off, thin air.
Right.
So hyper focused and local knowledge is the really important component to it, right? So we get super granular with it. And then it's a component of getting everybody to row in the same direction, which is the really, really hard part, especially in some of these like traditionally industrial neighborhoods. If you have somebody that's been there for 50 years or 100 years, right? Like they inherited the business from their father and, it's a mechanic shop. And they're like, I'll die here before I sell.
Right.
It's very challenging proposition to get them to see, well, you could do that, but like, here's this alternative that you may have never thought about or talked about or even realized was available. Let me explain what that might look like for you and how that's actually beneficial in all these different ways. But again, you have to get everybody on the same wavelength, right? So making the same improvements to the building, attracting the same tenants because of lifting, the rising tide lifts all ships sort of mentality.
Right.
And if you can curate the co-tenancy where they're all attracting a very similar customer base, that's really the magic sauce, right? And so in order to do that, you have to be able to get critical mass and you have to be able to get people to align together that oftentimes have very different personalities, right? And they may hate each other, frankly, and you have to be the conduit.
Neighbors, right?
Yeah, exactly. And more or less the proverbial punching bag, right? I say like that's our job. That and therapy, like we're sort of like pseudo therapists, trying to like talk through
Right.
deals and keep egos in
No.
check and everyone happy. if you can
No, I
successfully
get
do
it.
that, you can unlock a
Yeah.
neighborhood, but it's a
Yeah.
lot of
And
work
what,
and you got to be involved.
right. Because the audience is anything from somebody who owns a fourplex or a flipper or this all the way to a syndicator and a family office that's got 5,000 units. So what he's doing is he's creating a vision, right? He's creating a vision for a neighborhood and repurposing is a very unique real estate strategy that is only done by 0.00005%, where everyone else is buying cap rates or thinking about a capital stack. He's talking about recreating a neighborhood for clients and tenants that have had an auto mechanic shop in the same neighborhood and they have no idea of the possibility. So, I mean, that's huge, Jamie. So, I'll ask you another question. Flagler Village in Fort Lauderdale. It went from forgotten, right? Literally forgotten, because when I was buying in there, it was Section 8, right? Peter Feldman, all those big names, right? And so walk us how you saw the opportunity and how you made it bankable, particular to Flagler Village. Like, why did you choose Flagler?
Yeah. So, I mean, well, let's bring everybody back. For those that don't know what Flagler Village is, it's roughly 270 acres in Fort Lauderdale. It's just north of downtown. It's roughly bound by Sunrise Boulevard to the north, Broward Boulevard to the south, US 1/Federal Highway to the east, and the FEC train track to the west. So fast forward, and there's $2 billion developments that are occurring in that neighborhood now. So that's kind of where we've come present terms. One by
Right.
Hines and one by Amco, right? So two of the largest developers in the country. But in
Correct.
between that, call it 15 to 20-year period, there was a tremendous amount of blight and distress and drugs and prostitution and all sorts of stuff. So
I
how I
remember.
landed there, I was down in Wynwood at the time, and I saw the opportunity and just the proximity to the urban core, and the zoning was right, and it had a lot of the right ingredients. And I found a building called Flagler Uptown. That's what we subsequently named it. And I brought all these different investors up from Miami, a lot of guys that I looked up to and respected, and they were doing stuff in Wynwood, and I was like, guys, you're going to understand this. There's a lot of similarities and parallels. And I drove them all up, and they all laughed at me. They're like, "This is the dumbest idea. This is not going to work. Like, you're an idiot." I'll never forget. One of them wouldn't get out of his car. It was like that was the moment where I was like, "All right, like I'm done, and like I have to do this myself, right?" Because
100%.
it's like I'm above this sort of thing. And I was like, "Okay." Well. So I bootstrapped that deal. I put it together, and I underwrote it at, I think it was $15 a foot modified gross, and we performed at, I think it was 25 to 30 triple net. And then I
Wow.
did another one down the street, and I think
That's double that your performer or your
even more,
expectations.
right? Because it was modified
Right.
gross triple net. So yeah, I mean,
Right.
the returns were phenomenal. And then the next
Right.
one that I did, I think the high water mark that we hit was, I think it was $50 a foot triple net. Then we sold those, as you mentioned, and so that set the stage, right? So that was the 13 and change $1 million deal several years ago, and on a price per square foot, on a cap rate, all of those, I mean, it was blew it out of the park. No one
I
got it.
remember. Right.
Yeah.
So
And then
what
all
was
those
the
same
biggest
guys
no?
that
From those investors. That's my question. Yeah.
all those same guys that were like, no, this is a dumb idea. Phone, wouldn't stop ringing. Like, hey, how can I get into the neighborhood? So some of it, honestly, is like setting the base case, right? And I don't do a lot of
Right.
principal deals myself. They're very minimal, and I always tell clients, if they're like, "Oh, well, am I going to be competing against you?" I'm like, "Absolutely not." First off, maybe I'll do one every 5 years or something, and two, I'm always going into the neighborhoods that I brought all of my investors, and they say, "Absolutely not." It's too risky. It's too this. It's too that. And I say, "Okay, well, I feel pretty confident about it, and so I'll go prove the base case." And then once the base case is established, those clients then come in, and we can help them with it. So we always try to be the tip of the spear in these emerging neighborhoods and going into them. But again, so fast forward, and now there's $2 billion developments that are occurring.
Yeah, no, 100%, 100%. So what he's saying is Jamie is like, he's the guy that goes for the gold, right? Like he's the guy on the Klondike. He gets the equipment and he's going for the gold. A lot of investors, they won't do it. They'd rather sell the shovel, or they'll wait till they strike gold and then they come in. But it takes a visionary. It takes conviction. It takes what I call a core value of find a way and never give up and staying positive. And I'm sure we can spend an hour just on the lessons learned, the mistakes and things like that. And that's what he does. But what he does at the end of the day is goes from 15 to 30 plus a square foot on the rental. So that's a double in value minimum, right, on a piece of property that you owned in that neighborhood. So it's huge. I mean, and listen, I live in downtown Fort Lauderdale, so I give you credit for transforming where I live, and I'm down there all the time today, and so on. So here's the proof. Today, we've got billions of dollars of projects going in there, and over 2 million plus square feet of deals, right? Flagler Uptown and the Hive sold for $13.25 million. I don't even want to ask you where it started, okay? Also, he introduced public art culture with the Herbert Galarza murals all over downtown. That's this guy. That's why you see the murals everywhere and so on. So he transformed a leasing narrative from skeptical to a stampede. And now who's building the Searstown project? How big is that?
Amco, a billion plus.
$1 billion plus. And you're talking to Jaime Sturgis from Native Realty, who wanted his friends to come back to Fort Lauderdale. You want higher profits without higher risk. The blueprint's right here. Hit subscribe and watch Real Estate Profit Boost. So most brokers lease buildings, right? You build neighborhoods. What's the Native Realty blueprint, for making a district magnetic? Because now I see what you did there, right? But now I see you pushing further into areas that even weren't industrial, right? And starting to transforming them. So have you built a system?
Yeah. So, I mean, geographically in focus, we really handle the Tri-County. I mean, we've gone all the way up into, like Melbourne and stuff like that. But primarily it's called West Palm down through Miami. That's our core focus. Again, we want to keep that hyper-local knowledge. We want to be able to know all the owners, all the tenants, all the transactions, where people are going. Because again, our job is to connect dots, right? So you had mentioned earlier, a lot of times when clients will go into a project, we'll already have a stable of people that have followed us into the fire, and we've been very successful with them. So we can call on them and say, hey guys, here's the next neighborhood that we're working on. Here's where we think it's going to be a really good fit for you, and let's go take a look. And oh, by the way, here's some of the co-tenants that we think are going to come along with you. So we can take a lot of the risk out of it, and that's really relationship driven. But the ethos of what we do and the reason that we've been successful and how we are curating these neighborhoods is the mantra curation over compensation. And so everyone at the company needs to abide by that. And what I mean by that is, you don't want to take a quick dollar, right? I mean, there's plenty of cheap dates out there, tenants that are going to come along, and you can just tell, you're like, I don't know if this is going to work. I don't think this is going to be successful or whatever. A lot of our competitors are happy to do the deal, right? Because they're transactional in nature. They just want to get it done. They want to get paid. They want to move on. We're long-term, and we look at this as a relationship with our clients as partners, right? We want to do not just this project, we want to do the next 100 with them as well. And so if we put in a junk tenant or somebody that, our gut is telling us is probably not going to work, or the neighborhood's not going to receive it well, or their business model isn't fleshed out, or they don't have enough working capital, whatever it may be, right? There's 100 reasons, red flags, if you will. And the longer that you do this, the easier they are to spot. And that's, again, our job is really to vet these tenants for our clients and provide guidance as an advisor. Everyone lives by that mantra. And so that's the differentiator between success and failure, and also long-term stability in a neighborhood. So,
right.
I would say
I agree.
Really
Listen, I love it. I love it. And that's exactly why Jamie's a strategic partner of Premier and things like that. And he handles my stuff and vice versa. Why? Because we believe we say we have it's called LTV. We call it lifetime value of the client, right? And if they don't even meet our ethics or core values, if they're calling and bullshitting about insurance, right? Or you can tell, we don't have losses, or we don't do this, we won't even take them on. And we also take on people that we build trust with for the long term, and we get on their team. So we don't take transactional clients, right? We used to get started, but today, we don't. So that's exactly what I'm hearing, right? And we align on those core values. And we've had, 15 podcasts like this. It's weird. The titans of real estate, like yourself and so on, they all have a very similar value system and how they pick tenants, right? Like the old church in Flagler Village. What was it called? The historical church?
Now it's Jay's Steakhouse, yeah.
Right.
The Lutheran church, yeah. Mm-hmm.
They've gone through 4 or 5 different tenants, correct?
So no,
Like they had a
there's
nightclub at one time, right?
it. It was one tenant before. They were there for 5 years. They were running two
Mm-hmm.
different concepts, and now this is the second tenant to go in there since they've
Okay.
renovated the whole thing.
Got it. Got it. Right. Because I remember that. You know, what's funny is our client is the buyer of it who's doing the micro units next door that he
The
could never
apartments
get
next door. Yep.
financing for. Yeah.
Mhm.
He couldn't get financing for it. So they bought the church and the school and renovated it. And he came to me looking for a tenant. Right. And I said, what do you want me to do? Right.
When the renewal came up, that's when we went back out to market, and Jay's just secured that space.
Okay. So you rented Jay's.
We did, yeah.
Oh, nice. Okay, great. I didn't know that. Right.
Yeah, issue with each other. That's why he didn't renew. They
Okay,
went after
cool.
each other.
All right, cool. All right, no, that's just so funny. I mean, so if we go back to the neighborhood, what I hear is like, if I could sum it up, it's like you're driving content, like not just comps. You know what I mean? Like
We're
you're
telling a story.
installing content into the neighborhood. Go ahead.
Yeah. I mean, we're telling a story, right? And we're educating people, right? So, again, going back to Flagler Village, I mean, we put together a video that people still come up and talk to me about, and it was like 6 or 7 years ago, about what was coming, and we did a visual overlay showing all the different approved developments and the unit count and unit mix and all of that.
I remember it.
And we just did that. It wasn't around a specific project. We love the neighborhood. We want to tell the broader story. People were really receptive to it, and they liked it. It was an investment without quantifiable ROI per se, like on a direct project. It was just something we believe in, and again, we're a big proponent of it. And again, we played a super active role in all these neighborhoods, right? So in different local, regional boards, community activations and nonprofits, whatever it may be. I mean, we've been a vocal proponent of all these neighborhoods from the onset and continue to do so. So, it's an
Another key strategy, right? So if you're going to invest in a neighborhood, especially be a pioneer with a vision, if you're not on the local zoning board, if you're not familiar with the government or what they're doing, and if you're not pushing them to really redevelop streets, create parks, whatever spaces, right? It's not going to happen, right? So again, if you want, like people think real estate investing is cap rates. It's not when you have somebody who's a visionary like this and so on. So when you go back to, you fully leased the motif, am I saying it right? And you brought, Go Grocer to Florida. And now what I see is you're reshaping Fab Village. And now the new area, which not everybody maybe know of, is called Studio City, right?
Yep.
So that's the 13th Street corridor. And I'll give you a funny joke is I had like 40 units off of Holly Heights Drive and in Lake Ridge. And the reason we did it in 2004 is because we heard 13th Street was expanding from the city because we were on the board. Now it's 20 years later, and Jaime is changing the neighborhood. So it's something happened. So what's your vision for these areas today? What should people expect here in Fort Lauderdale?
So Studio City is really unique, and it's kind of grown a little bit, right? So at first it was just 13th Street, which was an east-west corridor connecting Federal Highway to 4th Avenue. Now it's gone kind of from Sunrise up 4th Avenue to Wilton, so it's kind of like a big T. 13th Street is unique in that, like Jerry said, the city took what was a 4-lane pass-through and they took 2 lanes back and made it on-street parking for free, which parking is always, that's paramount to the success of retailers. So that started the process. It made a change of use a lot easier when you're talking industrial buildings going to retail or office or restaurant or cafe, whatever it may be. It's a higher parking requirement. So having the available parking makes change of use easier. So all of those things helped, but really on that, we were able to get everyone rowing in the same direction, right? So there was relatively consolidated ownership. So with 5 or 6 kind of key alliances from a leasing perspective, we got everybody together. We said, hey, if you make X, Y, and Z improvements, we're going to be able to take the rents from here to here. We're going to all attract this set or subset of retailers that are going to be able to complement each other. So Studio City is really cool because a lot of the tenants that started in Flagler, like Monse Swim, for instance, have moved to Studio City, as a lot of the original industrial buildings inside of Flagler have now been purchased by multifamily developers, scraped, and are being built vertical. So there's a little bit of displacement in that neighborhood, Flagler to Studio City, and it's close, 5 minutes, so you're not losing your customer base. The price per pound is affordable in comparison to Flagler Village. So Some of these businesses have actually purchased their own buildings, which is great. Like I love an owner occupant, especially like a small to, larger success story.
Right.
And there's been a number of those, right? I mean, like some of these neighborhoods serve as incubators at times for some of these retail concepts. Like Wells Coffee, I always look back at,
Love Wells Coffee.
they went into
Yeah.
Flagler Uptown. I don't know if they had a retail establishment in Boca or not at the time, but again, like, I think that was their first or second, and now they've blown up, right? They have multiple
Right.
locations and they're great.
Yeah.
My wife,
I have a keg in my office. I have a keg
Yeah,
of their
exactly.
iced coffee because of the location over here on the south side of the river.
Right,
That's
that's
where
right.
right, exactly. Right.
So, we love those success stories. I mean, that's like when people ask the why do you do it? It's the curation part, and then getting to go and see these concepts take off and be so successful. It's the most rewarding part.
Yeah, you know what's interesting to me that you just said that because I didn't picture what you said, right? But now I kind of get the big picture. Why? Because I used to live in Manhattan, right? I'm older than Jamie, and so forth. So I was an ex-Wall Street guy from '94 to 2000. So when I was living in Soho, it was very much a feel of Flagler Village, right? That kind of area. We had the coffee shops, the mom and pops. We had the designer, you know, uh, you know, outfits. They called it Euro back then and stuff like that. We had the little bars, the trendy coffee shops, and then art was popping up everywhere. But what happened by the time that I left Manhattan, it got too expensive, right? And what happened is too many people wanted to live there, and the price per square foot on the lofts and everything went through the roof. And at the end, the tenants that were mom and pop businesses or whatever you want to call it, not national chains, they could no longer afford to stay there, right? Even like a Monta Swimwear or a designer. So we had a place that was called Hell's Kitchen in Chelsea, which was horrible. So today, like as I was leaving Manhattan, the same thing happened. Somebody went to Chelsea and Hell's Kitchen, and a lot of those people relocated. Today, when you go to Manhattan, the galleries and the art districts are there. So it's kind of that's
Displacement
Studio
is a very real
City.
thing. Yeah, especially
Yeah.
in these emerging neighborhoods when they grow. Oftentimes, I mean, Wynwood's a great example, right?
Right.
It's cost prohibitive to be, especially on like Second Avenue at this point. So, now it's like the DJIs of the world, like the drone company and whatever else. There's other big companies that and some of them are even loss leaders just to have a presence there because the foot traffic has gotten to, such a critical mass. But displacement is a very real thing in emerging neighborhoods. And typically when that occurs, it will be another micro neighborhood nearby that starts the process again. And it's all kind of cyclical.
Wow. See that? That's huge, guys. All right. So once the neighborhood gets economies of scale or the news is out, right? You got a penetration point. There you go. So Jamie's the guy that you buy on the, we in Wall Street, we say buy on rumor, sell on news, right? So it's the same thing, but he creates his rumor, right? Meaning he creates that vision. So today's Studio City could be that next, like you said, micro whatever move, because eventually I remember on 13th Street, did you move the big Christmas store? That was the staple that was on 13th Street. Remember? Yeah.
Yeah. So they moved and now they're on Sunrise and holy crap,
Right.
it came out this week. I don't know if you've seen those plans, but they're going to build the $13 million campus where that is now. So that's again going to get moved. So
$13 million what? Mixed use?
it's going to be like a medical office campus. Yeah. Where
Wow, I did
Christmas
not know
Palace is
that.
now on Sunrise in Holman.
That's the old car dealership, right? The Holman Auto or whatever on Sunrise. Did you lease up where their old building was? Was that your anchor in
I
Studio
handled
City?
on both sides of them. That kind of hopscotch. That's one of the only buildings on 13th Street that we haven't touched.
Right, I remember. And by the way, who came up with the name for Studio City?
Ken, actually, one of our owners. He was like an influential guy down in Miami Beach back in the day, and I think that he's got a place on the West Coast. So I think that there's kind of some
LA, right?
Yeah, exactly.
Right, because that's what I'm hearing too. Is like Studio City in Los Angeles, right? So here's the bottom line: if you're a landlord, right, and you're listening to this stuff, a developer or a high stakes investor looking to enter a neighborhood early and scale big, right? You don't have to do all the work. You have Jaime Sturgis and Native Realty. They should be your first call because when they present you something, it's something that hasn't even maybe been created, or you're just getting in on the first floor. And that's what most people out there as a sophisticated real estate investors, they don't even see, or they try to do it, right? And I'll give you one more example on my own part. In 2005, we went heavy into Wilton Manors, me and my two partners that were my seniors back then, behind kids in distress. We did condo conversions in Wilton Manors because we saw Wilton Manors and the population changing, right? Dean Trentalis was my lawyer because his little office was there. Right. So another micro trend, and yeah, that's an LGBT community. But again, we believed in dinks, double income, no kids, and we thrived. I think 100+ condo conversions in an area where it used to be called children's in distress, nonprofits, homeless, drug use, and things like that. So again, following micro trends is Jaime's and Native style because they know Native. That leads me to another point I just want to make in real estate, which I'm sure you'll agree with me. Like every corner in every city is different, right? And the biggest mistakes that I've made is in 2008 when I couldn't buy property where I knew Broward inside and out, right? Like you do. I started buying in Fort Pierce. Okay. Don't ask me why, because I was looking for product and right. The prices were inflated before the crash. So what did I do? I bought a 22 unit Navy SEAL dorms, concrete on the beach in South Beach in Fort Pierce. And I'm like, oh my God, I'm paying $55 a door, right? It's got a pool and I can throw a baseball literally over the building in front of me and I'm in the beach, right? Guess what happened? What I didn't realize is there was a biker bar this Archie's a block away that had been there for 35 years. Okay. And this is the whole, Native Realty, right? Native. So what I made was a mistake. So what I learned is I couldn't even lease this stuff up annually, man. I couldn't lease it annually. We went to a weekly rate. I had to have a manager that was friends with someone from the biking group, right? Or, a gang that worked at, otherwise I couldn't even fill it. And I wasn't even allowed to fill it unless I had a biker guy as a manager, right? And if you think managing in a low income neighborhood, because this wasn't low income, it just happened to be this biker bar was there and then they controlled 4 or 5 blocks. But if you're not native, you don't know that. So I just want to bring out that point, especially for investors who move markets. I mean, wouldn't you agree, Jaime? That's native. Yeah.
No, I couldn't agree more. And so
I broke even
on
that one.
Got it good then. One of the biggest drivers for South Florida and Fort Lauderdale in particular is the density in multifamily development, right? So, for example, I had a client send me a pure cap rate 1031 deal. One was down here and one was in Mississippi. And he said, well, look, the cap rates are almost the same. And I said, yeah, but that town has 1,500 people that live in it, right?
Right.
This that we're looking at here has 1.5 million people, right? So the appreciation on the underlying land, I said, let's say this terms out and you're just sitting there with your acre of land. I mean, how many acres of land do you think there are in a place that has 1,500 people? How many acres of land are there in Fort Lauderdale that are available for development, right? So the underlying appreciation of the dirt itself, just from the density, not to mention, once you start to layer in multiple exit strategies, whether it be vertical development or, again, adaptively repurposing the building that's there or renewing the lease that's in place, whatever it may be, right? Like if you can create multiple exit strategies where it starts to become a covered land play, which a lot of the deals in Fort Lauderdale are, that's, in my opinion, the holy grail.
Got it.
Now you're not solely reliant on the cap rate, right? And it's, well, yeah, sure, you could do that, but the underlying zoning also works for mixed use or apartments or condos or, you name it, right? There's a number of different buyers that will be at that table when you're ready to sell, and you're not solely reliant on the income that's currently being produced by this asset because you have multiple options.
Love it.
The favorable zoning that we have, which is, great, very clean cut, and the development pipeline. I mean, the fact that there's $2 billion developments within 4 blocks of each other and another, 15 or 20 sites that we've sold just surrounding that inside of a 10-block radius for multifamily development. I mean, the density that's coming is tremendous. And so I've always been a huge retail guy.
Right.
Even when retail was a taboo, during COVID, is it ever going to come back, et cetera. We've made our clients just tremendous money in retail because we know it really, really, really well. And
Right.
oftentimes we're playing in the local and regional operator space, right? So it's not always the CVSs of the world or the, Bank United, whatever it may be. It's the local and regional guys, which has a diversified rent roll. Oftentimes it has faster annual escalations or fair market value resets on the leases, which allow for more appreciation.
Got it.
And oftentimes, again, they can be covered land plays. So, and then just to add even further to that, like on the small shopping centers, which we're doing a lot of on and off market, those are becoming even more valuable because a lot of them are being purchased, knocked down, and redeveloped. So it's a supply and
Right.
demand imbalance, right? So now all of a sudden you have a handful of centers, neighborhood centers, right, or strip centers even. And I know of 4 or 5 right now that are not public, but I know the owners and I know they're going to be torn down. So, now you just removed 100,000 square feet or maybe even 200,000 square feet from the market over the next 3 to 5 years. And you've actually added several thousand units with all of the developments that are happening. So again, the supply and demand, you now have more people that demand even more retail with less options.
Right. No, I listen. The building I'm sitting in, right? It's the same exact strategy that he's talking about, right? I got a 5,200 square feet structure here, 150 feet on Federal Highway, 7 blocks south of downtown Fort Lauderdale, where these billion-dollar projects are going in. And yeah, I bought it for what other people would have called a negative cap, right? But I work with Jaime and things like that. They were paying $26 a square foot. They had 1 year left on the lease. And see, he just dropped so many little tricks into this chat. I heard them because I'm a sophisticated real estate investor. But for example, these 2 buildings were a check cashing store and a nursery, right? And we're on Federal Highway. The zoning's already changed. Here on this side, it's 50 feet, but residential, but that's going to change. But the landlord who owned the building, he didn't put in lease escalations of more than inflation. Okay. So when we experienced COVID, things went up 30 to 40%. He's like fair market rate escalations and things of that nature. But again, he's also tenant friendly because he's anchoring your tenants. So he creates a win-win. But then there's a covered land play behind it, right? So when you have a $2 billion development coming down the road, if you don't have the right wording in your leases, there is no covered land play because at the end, in an urban core, right. So if I lease this out to my tenants for 15 to 20 years, there's no covered land play. I have to buy them out. So those are the little.
We negotiate them in.
Right. Negotiate them in. Right. But at the same time, you take care of the tenants, right? Like you say, listen, no one's going to come in as a tenant and I got to be out of here in 5 years because if Fort Lauderdale is going vertical on this dirt, right? And the dirt's worth more than the building, which I know Jaime owns the building in front of Home Depot, which is the dirt is worth 3 times the building. And I'd say this dirt is worth about, the same, right? More than the building. So there's a lot of little nuances that he's dropping that if you don't work with the right retail person and you're playing these retail games, especially now you have the live local, right? Which is another game changer for urban and density and things like that. Because now, I'm driving out by the Hard Rock and properties that were on the corner of 441 and Griffin, which were useless, right? That sold for $30 a foot.
Yeah, couldn't give it.
There's a high rise going on. Do you ever think it'll stop? It's like people
No.
Florida. I mean, listen, I know the math. I do it on YouTube, right? There's still 1,000 people moving here. And my last video, it's called Cash or Crash, right? Florida. Don't listen to the news. And you know what? When we dove deep, you know who's moving here? It's big money. It's Wall Street money, right? Citadel just moved to Miami. Goldman Sachs just moved to West Palm. And yes, there's a clear softening in the market on the residential side, right? Medium price houses, things like that. But what do you think? I don't see a crash or anything like that. I see opportunity, the best opportunity in probably 3 to 5 years. No.
Yeah. So, I mean, South Florida is unique in that we don't have the option of urban sprawl like pretty much every other market does, right? Ocean to the east, Everglades to the west, cities north, south. I mean, everywhere, right? So it's really density and urban infill. And then to your other point, there's tremendous wealth that has come here. I mean, I was on a call yesterday with somebody that moved down from the Northeast, and he spent $45 million on 2 houses in the last year. And it was a
Wow.
casual thing, And then there was another thing that was bought that intended to be developed into another house, So
Right.
that you don't see that everywhere in the country, right? I mean, that's like, it's the 1% of the 1% is down here. So there's tremendous
Right.
wealth. And I don't see that changing. It's a tax favorable state, and it's warm all year round. And a lot of people are very happy with both those things.
Right.
So no, I think it's going to continue to infill. And
There were 2 recent transactions too. I don't know if you saw them. It hit Traded. If you guys follow Traded, Jamie's always on there. But there was 2 billionaires who bought like 1960s, 70s multifamily and retail in the Grove and in Brickell. They just traded. There was no cap rate. It's 100% covered land play. I saw it 2 days ago. So it's not stopping. Interesting, right?
No, if anything, I think it's accelerating. I mean, this year in particular, the last 18 to 24 months have been really challenging from an investment sales perspective, but 2025, really starting January 1, has just been hot out the gate. I mean, like as busy as 2022 was. So in that
Right.
respect,
See,
it's been
I have
hot.
a saying. Nice.
Sorry, go ahead.
No, go ahead. So I have a saying that when you're native, right, like you are, and you know the market, and the demand continues, and I've been in Fort Lauderdale over 20 years. He's been here longer than I have. There's what I call the core players. They're like a safety net, right? So the values never, do you have experience with that? The values will never get down that low because the core players come in as a safety net. Do you have experience with that?
100%. Yeah.
Yeah, because you're working with them.
Last
Yeah.
18 to 24 months, like those were the people that were moving just because, again, they know where it's going to go, and they understand the underlying assumptions and value of the property. But there's a lot of new players that have come into the market, and that's also funneling growth and driving growth, frankly. So again, there's
They see the vision.
it's coming from out of town,
Right.
yeah, and they also understand. Some people that, what's the best way to describe this? Some people that are. It's almost like when you're too far in the woods to see through the trees, right? Like that saying, if you've been here your life, then you may have pegged like this is what it's worth and not $1 more. But then you have the other guy who's come from the other market and he's seen the full trajectory and he's like, oh, you guys are here and it's going here. I would be crazy not to buy it right here because I know what the next couple of innings look like.
Yeah.
So there's a lot of that too. And then there's also, there's institutional money that's coming in and is making the investments and the upgrades that say maybe some of the prior owners wouldn't or couldn't, right? So that's also accelerating things and also raising the bar. Some of the new developments that are coming out, they're targeting $5 a foot rents in down Fort Lauderdale. They're big numbers.
Right. That's crazy.
A couple of years ago, if you said that, you would have been laughed out of the room. They'd be like,
right. Listen, I was
shocked.
shocked. Right. Listen, if you go to like 79th Street on Biscayne, right, in that area, North Miami, they're getting $75-$80 a foot on furniture stores. Yeah. Right. And I was like, what? And then when we did this building, we're like, let's go out at fit. We called you, right? You go out at 55 a foot minimum, triple net. I go, really? I'm like, and it happened. It happened. Leased up. Real investors are using this boost to boost returns. Real estate profit boost. So why aren't you? Watch now. Click below. What do most brokers and developers get wrong, right, about redevelopment, right? They think leasing is driving the culture, but it's kind of the other way around. You can't buy your way into a community. You have to build the trust first, right? So
yeah, you have to build it from the ground up. And I've always told agents here, to have a really good foundation on investment sales, you have to do leasing. And a lot of people will try to jump over that and skip to it because the glory comes in big investment sales. There's lots of money to be made in that. But the truth is, if you didn't do leasing and you don't understand the nuances and the landmines that are found within the lease, that's what makes or breaks a deal, right? So when I take on an investment sale, first off, I can abstract a lease. I can read a 70-page lease in 5 minutes because I'm trained. I've done it so many times. I know what I'm looking for, and I'll find the landmines and I'll bring them to my client. And I'll say, these are the objections that we're going to have to overcome, or these are the problems that we're going, depending on if I'm on the seller side or the buyer side, these are the problems that we need to overcome on the sell side, and here's the objections that we're going to get, and here's how I think we should respond to them. And then on the buy side, hey, here's the issues that we're stepping into, right? Because we're now assuming this lease, and here's how I
Right.
think we can diffuse these bombs in the future. But you need to know that the bombs are here. So again, a lot of people, in my opinion, you'll never be a great investment sales broker unless you started from the ground up on leasing.
On leasing. No, I get it. I get it. Right. Because it's like me in the insurance space, right? My biggest challenge for everybody out there, right? Because here at Premier Protection, we focus on NOI and insurance, and my competitors focus on commissions, right? But here's my biggest challenge is when I recruit, and now I recruit from FSU, I recruit from Gainesville to get my advisors, right? And guess where I'm recruiting from? The real estate side, right? Because if they come out of the insurance school, but which only has 320 people, guaranteed 99% job placement at FSU, but the real estate school is 2,400. And guys like Jaime leave there with a degree or a master's degree, and they go to work for zero, right? They get no commission, and they're told 2 years before you get your first lease or sell your first deal and things like that. So for me,
Work for us.
unless they come work for you. Oh, you help them out. Okay. Listen, if they're at places like Marcus or CB, or they tell them 3 years, you got to live with mom and dad, right? And I tell them the same thing, by the way, at a real estate school. I'll pay you a base, and you try cold calling insurance and talking like a real estate guy, you'll get everybody. Because the industry is just so, I don't know, greed based, whatever you want. It's just broken. And even if my son, like he's at FSU trying to go between schools, he interned here. He wants to call Jaime on one of his clients and sell him sinkhole coverage, terrorism insurance, because he's trained that way, right? But it doesn't align with NOI and things of that nature. So, and so on. So if you're listening out there and you want a real estate guy to do your insurance, premierprotectioninsurance.com. Reach out to us. We work well on that, and we get NOI and long-term value and so on. All right. So everyone's going to ask, and by the way, you got me thinking, and I almost wanted to tell you, I feel like saying, hey, Jaime, I'm looking at this corridor because it's got a lot of small retail, and I see a lot of things that are changing. And I'm like, this is perfect for what this guy and Native can find me, but we'll take that offline, and then we'll let you guys know once we're buying. So my next question is, what's the next neighborhood about to pop? Okay. Is it Oakland Park? Is it Studio City is already kind of there, right? Is it Sistrunk Innovation Corridor? Who knows, right? Or is it Pompano's East Coast infill, right? So you tell me, because my idea is actually a little west up the river. I'll give people a hint.
Interesting. What I would say is it's really interesting that not all neighborhoods are created equally, right? So, there's certain neighborhoods that at a 30,000 foot perspective, when you're looking at it, they should have popped a long time ago. Sistrunk's one of them, right? And so, over the years, I've had several clients that have gone in and I've said, hey, I know all the owners on this block, and you're going to really be swimming upstream. And they tried to do it anyways, and they found out the hard way.
Right.
So again, that's back to the local knowledge part of kind of understanding what will and won't turn and the speed at which it will. So Sistrunk now, I think, is much farther along, and we're doing a bunch of projects over there, and it's really matured. Studio City has legs. I'm still a very firm believer in that. Studio City and 4th Ave, I think, are really going to run.
I can see that.
Town is also interesting. There's a bunch of stuff, right? So I always start with the client of like, what's your risk reward level, right? Because that's what it all comes down to, is risk reward correlation. Then asset class, purchase price, longevity on the hold, income hurdles that they want to hit as far as, cap rates and this, that, and the other. And once I have a clear picture of what they want, then I can steer them to, hey, here's options 1, 2, and 3, and here's the pros and cons of all of them, right? My competitors only focus on the pros, and it's all sunshine and rainbows. You have to understand both sides of the coin to really make an educated decision on what's going to suit you best. So my job is to do a little bit of discovery, understand what you're looking for, and then bring you deals. And we have off-market deals that are coming across our desk every single day. So, we probably have $100 million in off-market deals right now that we're working on, and there's always more coming. So our ears to the ground, we're plugged in. This is what we do.
Right.
I literally dream about real estate. So, it's a 24/7 thing. We're addicted, and that's what it takes.
Right. I mean, listen, guys, $100 million worth of off-market deals, and now that you're understanding their strategies and how they create demand, covered land plays, right? Very simple. Native Realty, Jaime Sturgis. Just Google it. You can find them very easily on the websites and the media and things like that. So, I mean, that's huge. It's interesting, right? Like that cis trunk, right? Because I owned a lot of multifamily, right? And I never bought past seventh, but we have a friend that owns a ton of stuff past seventh, right? I was always afraid. And then I used to own stuff on Northwest 4th Ave and 5th Ave, right? And they built that warehouse area, right?
Right, we're doing the leasing for that. So and
You're right,
that's really interesting because there was three brokers before us, and they pretty much
right.
think like it stayed almost vacant for
I saw
years and
that,
years and years.
right.
And we were watching it, like, man, like if only we were handling this, like what we could do. And I'll get the exact stats, but I think we're at like 95% occupancy.
Yeah, I
Just
couldn't
over
believe
a
it.
couple months ago, like we've been flying through leases there.
So what was your
Ownership,
edge?
yeah.
Because when they were building it, I was like, oh boy. And then I saw they couldn't lease it up. Then, of course, everywhere you drive in every corner of Fort Lauderdale from commercial to south is a Native Realty sign today, which sticks out, great brand and everything. I don't even my kids know it. Like, Dad, what's Native? I go, all right. No, literally, kids know what Native is.
I had a
So
marketing company before real estate, so I'm glad that worked.
no, it worked. It worked because it's everywhere, and you flag everywhere, right? I think there's your sign across the street on Federal. And I'm not kidding.
You're right.
So he's doing something right, folks, because people trust him. And tell me about that. Like, what was the edge? Because you brought in the tenants, you had the reputation. It's a different game, right?
Yeah, well, so we understand the neighborhood, right? We can tell the story about it. People trust us, and we have the track record to prove it. So, I mean, those are
There you
like the
go.
high level components, but everything else is just execution. We have the right team. We understand the vision. We understand how to go hunt these people down, right? A lot of our competitors just sit and stare at the phone and like pray for it to ring, which is ridiculous, but that's what they do. And I don't know if it's naivete or laziness or both, but that's sort of our competition, right? We're
Right.
super proactive, so we'll go and we'll talk internally amongst the team, like what would work really well in this project, and then we'll go and we'll hunt them down, and whether that be locally, regionally, or nationally. We'll go find these concepts and we'll deliver a value proposition
Right.
of here's the opportunity, here's who would be next to you, and here's why we think that you're going to do really well here. Is this something that you're receptive to? Are you expanding? What are your plans? And it's relationship driven. So it's
No, I
all of
get
those
it.
things, but it's
Yeah. You're
that's
also scaled, seasoned, and you're same with us. See, this is our core value. It's called find a way, right? And that's exactly what I'm hearing, and that's why he is where he is today, and that's why you're at 95% lease up.
yeah,
Wow,
yeah. We're
and
about
that
to
was
be
a
way.
big right
Yeah,
because I watched
we're
it because I
flying
own
through
stuff on.
leases. We've only been on it a couple months. Like it's crazy.
It's unbelievable. Is there an anchor tenant, or is this all art studios? I went through there the
There's
other
a whole
day.
bunch.
Yeah.
We're negotiating with a really cool concept out of Miami right now that I think is about to get inked. But
Wow.
it's a really cool mixture and
And
really
you
nice to see.
you're training, obviously you're not leasing up all that space, but so you're training some really, really good people at Native, right?
Oh yeah,
Recruiting the
yeah.
good.
It's a
Yeah.
team. Yeah.
Right.
Kaylee, my COO, she's amazing. She's been running point on that. I mean, she's far better at leasing than I am. She's unbelievable, and the whole team, everyone around us.
Right.
Yeah, like
But
it's the people, right? That's the secret
now,
sauce.
well, you know what I say without getting biblical is you created your business in, when I say biblical, right? They say that God created us in his image. You've created Native in your image, right? So when I get spiritual, I think about an entrepreneur and a visionary. It's exactly what you did. He's created a culture, a vision, right? A relentless pursuit of his vision in his image. And then everyone who's hired on does it, right? Because I watched that product stay vacant for a long time. We have a couple clients, Norm Schwartz, I'm sure you know, around the corner, who's been like, are they going to lease up? Look at that, 3 months. So rock and roll. Do you like any other areas? Because I think I saw your flag up in West Palm near Dixie,
Yep.
right?
We're doing some things in West Palm. There's some really interesting neighborhoods up there. Del Rey, we have some stuff we're working on. Boca. I mean, again,
Right.
we have all these different neighborhoods that we're working on, and depending on the risk reward correlation of what people want and what type of asset class,
Got
we
it.
can kind of put them in on the ground floor, and help them to create that change. Um, and I mean, like even in Studio City right now, like we have one deal that's almost completely stabilized, and it's a large piece of property. It's a little bit over 11 million. It's got mixed use, so it's retail, creative office,
Wow.
residential. I mean, great property. It's in the OZ. They're in the process of changing the underlying zoning to neighborhood mixed use, so it's a covered land play in the future. So that's a great opportunity, and probably close to like a 7 cap. We have
Wow.
another right down the street, which
And these are all off market. They're not on LoopNet. They're not on Craigslist,
yeah,
right?
a lot of the stuff that we do never sees the street, just because, again, clients want it to be discreet and relationship based.
Understood.
So that's the way it works. But again, I mean, we always have different stuff we're working on. We have medical office and retail and shopping centers and industrial and you
No,
name
I
it.
like it. I like to have an edge, right? And like, since, I really, meaning I still have my real estate assets. I still do that. I have property manager. I've trained for acquisitions and things like that. But for me, like lately, I've been LP, a limited partner, and some of him and I are in something called the South Florida Real Estate Forum together, where we just listen to we engage leading real estate entrepreneurs to learn and grow from each other and help each other, same ethics and so on. So for me to have a guy like you around in those groups and hear everything that you're doing and the connections, sometimes it's easier just to be an investor, right? Because obviously we share the same values, we trust each other and everything, and money's not our main driver anymore, right? So, and so on. So and I'm fascinated that like a lot of this stuff gets done off market, right? And people are not, I love your niche, the retail, the whole thing. So let's talk to our investors real quick. If someone has 5 million, 10 million, or 50 million, what should they be looking for in this market, right? And if they were going to call you, right, as the tactical investor lens, site selection, tenant targeting, political overlay, zoning hacks, you would be investing in just about everything we've said, right? But anything in particular? Let's say investors listening, 5 million, 10 million.
Neighborhood shopping centers with multiple exit strategies for redevelopment down the future. Again,
Wow.
Supply and demand. If we're just talking hyper local on a Fort Lauderdale basis right now, that's where there's going to be a tremendous amount of value created just through the few shopping centers that are here right now are on the chopping block and or have already been purchased and are slated for redevelopment, whether that's public or private. There's a mixture of both, which I'm familiar with both of them and can discuss and share. But the supply and demand imbalance is about to change on that. Not to mention, the Galleria Mall, that's under contract. I think that's going to be redeveloped, and again, that's a huge piece of property.
Is that going to happen? Yeah.
I can't say too much, but I would say yes.
Okay.
I am very confident that will happen.
You know what we don't have in Fort Lauderdale? Maybe you know where it's coming because he knows everything. So again, Jaime Sturgis, Native Realty. We don't have a design district. We don't have the Gucci, the Chanel, you know what I mean? The Prada, but we have $40 million houses selling, right? So is there a vision that Jaime Sturgis creates the next design district in Fort Lauderdale? Is that happening? Hey, I thought about it for the Galleria Mall, but you know the details on what's going on over there, so it's not so easy. But give us the inside scoop for this audience. Let's hear it. Yeah.
To the extent I can, beyond the NDAs that I've already signed, I would say.
Okay, that says it all. Go ahead.
There is a desire and a rough plan to create such a place.
Okay, and you're involved. Is the city involved as well? Not really. More developers, right?
It's kind of outside their hands because it's already in process. But I think
okay,
to the extent
there was a rumor of Hemmershey, like just that was going to be there, but I said there's no way. It's too close to downtown and the urban core over there.
Too. A lot of it is historic.
Some of the buildings, huh? Because the sailboat bend
on Hemmershey are actually historic. Yeah,
right. I mean the Galleria
development that's coming there, right? There's some very large projects that are planned and some more that haven't been publicly announced.
And Panthers, the rumor was a Panther stadium.
Yeah, I do remember that. I haven't heard anything about that in a minute, and I feel like the land that I thought that it was going to happen on, it may still be available. I'll make some calls and find out. I mean, that would be unbelievable.
That would be huge, especially if we win another Stanley Cup right here. But to me, the Galleria was always that place that could be repurposed for a Bell Harbor Shops, right? And at one point we had the Neiman and the Saks, but I don't want to get into the details, but I saw that as like, wow, there used to be a movie theater over there, all that
Yeah.
good stuff. But we need it, right? Like
Yeah, the
that's, I mean,
demand
not
is
that I
there.
shop at those places. I go to Sawgrass, but
People drive down to Aventura, they drive to Boca, right? And that's crazy. I mean, they shouldn't
or
have to
Bell
drive.
Harbor. It's an
Really,
hour
you're
with
like, yeah, even
traffic.
farther. Yeah, yeah,
It's a good ambiance though, like having lunch there. I'm not the guy that buys that stuff, although my wife wishes I was, and so on. But whatever. We're still Sawgrass people, and so on, so on. All right, so cool. So in closing up here, because it's just so much and super cool, Jamie. Thank you. So you've built a legacy, Jamie. What's the thing you're proud, the most proudest of, and what advice do you give to someone who's just starting out? We'll leave you with that today.
I'm most proud of the team, right? I mean, I have people that I've trained what I know, and they've far exceeded my capabilities. So, like, that's the coolest thing to me, that I can turn to somebody and be like, "Well, what are your thoughts on this? You know, how would you handle it?" And they're like, "X, Y, Z," and blows me away.
Right.
Um, what I would say, I mean, for people that are starting out, one of the questions I often ask, like even during an interview, is what are you willing to sacrifice, right? Because it's so easy for people to be like, I want to do this and I'm going to make this and this amount of money or whatever it is. I'm like, great. What are you willing to give up to do that, right? And like point blank question, are you
Right.
going to, work till 10 p.m.? Are you going to miss, your son's ex because you have to do whatever? There's hard choices that have to be made in life. And I'm not saying I'm for or against any of them, and I'm certainly not going to push them upon somebody else to make, but they do need to be acknowledged and they have to be honest with themselves and others.
Right.
Otherwise, they will not meet those goals. So I think it's an important realization that the input equals the output, as basic as that sounds. I think a lot
No, I
of
get it.
maybe the younger generation only is focused on the output, and kind of foregoes what needs to go into it, in order to achieve it.
No, I love the way you phrased it. They're all focused on the output, right? Which is,
Right.
yeah, okay, output. Here's the motivation or whatever it is, but it's the input. And listen, I don't even know how old, but I'm around 50, and I'm telling you, I work more today than I did when I was probably 30 years old. I don't know what it is. Maybe I love what I do, but like, and I know Jamie works a lot, right? And he's got young kids, he's married, and everything like that. But you're right. They don't think about the input, the 70, the 80, the 90-hour weeks, the Saturday morning, especially when you're a real estate broker, right?
Right, you're on call. I mean, you have millions of dollars on the line for these clients, and it's almost like being a doctor. I always kind of use that analogy, just because when they call, they expect you to pick up. And
Right.
when you have a 10 or 20 or $30 million transaction on the line, it's not really a negotiable thing. It's an expectation, and if you want to earn that same opportunity again in the future, then you have to make yourself available. And so, for better or worse, there are sacrifices that come with that as it relates to separation of work and life and family and all those things. So again, eyes wide open, being honest with somebody, and they come in, they say, hey, I want to make 100 or $250,000, whatever it is, a
Right.
year. I'm like, okay, great, you can do that, and we have all of the platform and framework for that. But in exchange to get there, this is what you're going to have to do. And oftentimes, again, there's, I think, a realization or cultural misalignment where, especially when people are coming out of college, they're like, whoa, that's not what I
Listen,
expected. That's not what,
I
it's not what TV shows me, right? It's not like, the Real Housewives of whatever,
no, they don't get
that's
it.
not what they're
Yeah.
doing. And you're like, well, okay.
Right. No, I'm in
So,
the middle of it because I'm interviewing these people to try to, because our biggest challenge, one of our biggest challenges like yours is people. So
yeah.
and I've learned for me, is I'd rather take somebody who's 24, 25 and fresh because they believe in me, they believe in the vision, we share the ethics, the culture, the values, and I can, train them from the ground up. Where in the insurance industry, when I recruit, somebody, average age in insurance is 57. They come with all these habits from the industry and they don't understand net operating income. I know 35 people, he's off of Sunrise, so it's crazy. So listen, I'm going to wind this down. So what we're not going to do, sometimes I do a lightning round, right? Like, where do you think interest rates are going to be? I know what he's going to say. He knows what he's going to say. It's what most people. But what I really heard today is, first of all, a vision of creating, right, from scratch, based on multiple factors, right? Demographics, people moving, creating neighborhoods. And that's what Jaime has done, not to mention a relentless work ethic, creating a culture, a leader of values, honesty, ethics, same tenants, relationship based, all of it, right? It all comes together to see Jaime Sturgis, right, at Native Realty in extreme success. But what they don't get is what it's taken to get there. But he never lost faith, never lost vision. He never lost the grit to do it. And he never lost his ethics, his honesty. And that's the key, right? I call that the universe. And that's why I believe he's going to continue to be successful and so on. So what the key is like bet on neighborhoods that no one believes in yet, right? And be like Jaime. Bring people who believe in people like him, and we know all the reasons, and build the kind of block you'd want your name on. That's exactly what you've done with Native Realty. So on. All right. All right. Anything you want to leave the crowd with, right? I mean, we're going to put in the description, everybody, where you can reach out. You've heard a lot of things, a lot of off-market deals, right? And just make sure you share the same core values as us before you call him, and don't spin his wheels. If I can put that out there.
Working with good people and
yeah,
that are reliable and honest and trustworthy and loyal.
Right.
Look, I would say if I had to sum up what we do in kind of one sentence is pioneers get slaughtered and settlers are too late, right? And we find a way to thread the needle in between those two so that you're not the first, but you're not the last, and you get to ride that wave up. I mean, that's our specialty.
Awesome. I love that. Pioneers get slaughtered, settlers are too late, and you're right in the middle. Awesome. I love that strategy. And he's so right, 100%. So I love it. So bottom line, Jaime Sturgis isn't just a broker. He's an architect of urban value, and Native Realty is setting the blueprint for how neighborhoods get built in this new era of real estate, urbanization, high density, and it's not over. It's only the beginning. You can partner with Jaime at nativerealty.com, NAITIVERE. You know how to spell nativerealty.com. And, you can always reach out to me at Premier Protection. We send clients back and forth every single day to each other because we align on our values and what we do and things like that. And again, share this with somebody. We created Real Estate Profit Boost, right? To pick a guy's brain like Jaime Sturgis and to put it out here over an hour podcast, it's free mentorship, guys, right? You have no idea the value of what you just got here. You do if you're a real estate investor and what the little tricks are and who to find. But it's found here on Real Estate Profit Boost. So share it with your partners, share it with your investors, subscribe, do all that, share it, comment below. It's a community for mentorship. It's free. We're not charging anything, and we hope that you learned a lot. And that's a wrap for today. Real Estate Profit Boost. Boom. You the man, Jaime.